Hello, everybody. This is Jake Senzia, host of the Jake and Gino podcast with my co-host, the multifamily mentor, the coach of Chef, the Father of Six, the best-selling author, G Daddy, Gino Barber. Gino, how's it going?
Jake, you know how I'm doing today. I'm struggling. It's painful today, but it's okay. We're going to get through it. I promise. We're going to deliver an amazing show because guess what? Multifamily is shifting a little bit. And we've got a specialist on today who's going to be speaking at MM5 in November. So I'm excited to be on. Thankfully, I'm on in one piece. Let's make this happen, bro.
The G Daddy is here. And we have a very special guest. Today's guest has been in commercial real estate since 1999. Maybe some of you weren't even alive at that 1999. Point. But more importantly, he consistently ranked in the top 5 in the nation every year before starting his own private multifamily brokerage in 2021. Now you can come see him on our stage November 5th and 6th in Orlando at the Multifamily Conference of the Year. We like to call it the financial vacation for smart people. So without further ado, Mr. Beau Beery.
What's up, fellas? What's up, fellas? Hey, we did some good love together on the first video. We got some good views. Let's do it again.
Let's make it happen, big man. So here's the thing. I want the inside scoop, okay? This feels a lot like the spring of 2020, and you're the guy that knows, okay? It seems to me like everyone's waiting for the next guy to move. Who's going to make the first move? What are we seeing out there? So I need to hear from you. The boots on this, the man in the mix. What the hell is going on out there, right? What's going on right now?
What I think is going on is you've got buyers who justifiably believe that values when they come to market should be adjusted, especially when interest rates have gone up and they're going to go up another 0.75 of a point to a point this week, right? So justifiably, just when you think about it from a logical standpoint, value should come down. However, the counterbalance is if you're an owner and you guys are owners, you're earning more rent than you've ever earned in your life.
Bingo.
Right? The rents have never been higher. And so why would you come to market unless you absolutely have to, unless you're a prospectus with your investors mandate to sale in 2022, why would you come to market at a discount, right? So we have this, meanwhile, the number of sales has slowed down a little bit in the last couple of months, right? Which there's the same demand, less supply increases value. And the amount of construction, at least in Florida, can't keep up with what we need. So I'm not saying that the values are continuing to go up, but I think at minimum, it's counterbalancing the interest rates. Now, if the interest rates pop another 0.75 a point, absolutely values can't withstand essentially a 2.5 points now when you add it all together, right? But the point is that sellers ain't coming to market and given some discount when their rents are higher than they've ever been. What I've actually, in the last 2 weeks, guys, I've turned down more listings than I've actually won or taken, just because the sellers have wanted a way higher price than I knew I could even create a pro forma for.
Wait, is this like a cat and mouse game? You tell them no, so they want you more. Come on, what is this? Is this like some inside selling stuff?
I'm really trying to give like real advice. If I owned a 100-unit conventional asset right now and I didn't have to sell, I'm telling them, don't sell right now. The rents are going to continue to go mad over the next couple of years. And if Republicans win in 2024, shit's going to go wild, right? I mean, it's going to be another fantastic hot market. So if you can last for another year or two, then come out. I don't even think it's going to be 2 years. I think it'll be in the next year, things are going to adjust and will become hot again for the sellers. But there's no reason to come to market and take a discount if your rents are crazy right now.
Bo, before I get asked this important question, because this, I think, is the central question that I love to really teach the Jake and Gino community, but 2 points to what you're talking about. Number one, it all depends on debt. Debt is the circulatory engine of the economy. If debt pulls back even more and says, I want 50% LTV, I want people with a lot of experience, that pulls back, a lot less people will be qualified. And I think the second thing is, are these sellers motivated? Do they have bridge debt? All of a sudden, they got their pants down. What am I going to do with the deal? There's going to be a lot of that opportunity. So always look out for the motivated sellers and look out and see what's going on with debt, everybody out there. Now, we've been in a seller's market for the last 3 years. Jake thought we peaked out in 2016. He was off by a couple of years. It's okay, Jake.
We all were. We all were.
I thought it was 2018, but I am an investor. how do I network with a Beau Beery broker in this part of the cycle? Because 3 or 4 years ago, there was a little wiggle room. I could, there was a lot less calls to offer. I can make some kind of offers. I can put a lowball offer in. How do I network with the broker and still keep my credibility?
Yeah. Well, I think there's a couple of approaches. We can talk about how to do it consistently in the correct way.
Yes.
But let me talk about the theme of the talk first. I think in this type of environment where sellers don't want to sell for a discount, buyers think there should be, and justifiably so, I would not, as an investor, be trying to convince the broker or the seller that there should be discounts. I think it's more of a, hey, listen, broker, I know where you are. I'm going to do my best on the offer. We're in a weird situation. It's almost kind of like you're speaking together about what is happening, instead of trying to sell the broker like, oh, this guy's got to come down on price, right? Because it's just not going to happen. Right? If the seller is mandated and needs to sell, maybe, but who do you know that needs to sell right now? I mean, to your point, what you just talked about is, if there's some folks who bought really, really high and have some crazy bridge debt, maybe so. But there's not going to be a whole lot of those, in my opinion. I mean, the lending standards were still good.
How do they exit that, right? The thing is, if you're exiting that and you paid a high price, you're going to have to get out even higher.
Mm-hmm.
So, I mean, that creates
right, but the rents have gone up so much. I believe that the probability of someone who bought in 2018 or 2019, whose rents have gone up that much, has ran the property so shitty that their value is now less than what they owe. I don't see that happening.
Yeah.
I mean, they're going to be able to refi at a pretty damn good clip and still be looking nice. You would have had to have been a total moron to have bought in the last couple of years with a 30% down payment, and even with some of the bridge debt, and not increase rents enough and value enough to where you're in a bad position. There's going to be some of those. I just don't think it's going to be on some big scale.
It depends on market also, everybody, because if you're in a market that rents haven't gone up 20% like Knoxville, let's say you're in the middle of the country, or you're in a market that's losing population, or in a tough, landlord market, that may be occurring. So beware, there may be opportunity there. Now, I don't want to be,
the opportunity is.
Yeah, I don't want to be investing in that market, because those rents, if they haven't gone up in the last 2 or 3 years, guess what? I don't think they're going up in the next 2 or 3 years. So we're always trying to push NOI, but continue along.
Or overbuilt markets, right? I mean, if there was a ton of new construction that came in, that can also soften things a little bit, right?
Mm-hmm. Talk about the remaining discussion we're having about.
So on the broker connections, I believe, depending on how large of a geographic area you're covering, you should be covering enough of a geographic area where, depending on the number of sales that are occurring, you can capture market share, right? But in general, you're going to have dozens of multifamily brokers that are covering that area. And there's no way the human brain can remember every single one of them. The fact is, you're going to remember only like the top 20%, right? You got the 80-20 rule. So you're going to be calling the top 10, 15, 20 guys who everyone's calling. I would make a list of every single broker that exists in all the markets that remotely cover multifamily. Even the commercial real estate guys who do retail and industrial, and every now and then do a multifamily deal once or twice a year, get them on your list, import them into a CRM. It's super important. Not freaking Excel, not your Outlook. Import it into a CRM that you can create automated contacts with them. So I suggest every 60 days, don't let 60 days go by when you aren't touching with a broker. That could be.
We got to call timeout. We got to call timeout because this is a misconception for folks getting into the business, and you're highlighting a very important piece of the pie here for an early investor. You're the salesperson, not the broker. This is where people mess up. And what Beau is detailing right now is you as the investor are the salesperson. He just recommended that you get a CRM. Who uses CRMs? Salespeople. Beau is trying to get the person that owns the property to list it with him. You are trying to get Beau to sell it to you. That is how this works. You are the salesperson. Carry on, sir. I just wanted to make sure people get that.
No, it's a super great point. If you think about it, so I cover the entire northern half of Florida. I have roughly 50, 55 competitors, right? As a broker, I'm competing. You as an investor are competing against tens of thousands of people from all over the world. I'm talking about India, Russia, Israel, China. All those are China, all of them. These people in different countries even buy 20, 30 unit complexes. Okay. So you are the biggest salespeople on the face of the earth. The problem is that that's not usually the mentality, right? When people start off in investing, they're just looking on LoopNet and occasionally they'll reach out to a broker because the broker had the listing, but they never get on the offense, right? The reality is you have to be a huge salesperson. And the broker, if you think about it, the reason you're a salesperson to investor is we want to be able to choose the right person who's going to show up to closing. That in turn allows us to do more deals with that seller and increases the likelihood of being able to do a deal with the same buyer and the same seller on other assets the seller has, right? It just makes it so much easier. So we want to choose the right person who's going to show up to closing that makes us look good, so I can keep bringing you stuff over and over again that makes me look good, that gets other more listings. It's a simple cycle, but you're not going to be able to remember to do this unless you automate it in a CRM.
Yeah.
How do I reach out to a broker, Beau?
Yeah.
I mean, that's the thing. I mean, like, I've got you on the list. Do I do emails? Do I do texts? Do I call you by phone? What do I say to you?
Yeah. So let's talk about the beginning person and then sort of the person who's been in the business. For the beginning person, I believe one of the things you don't want to do is reach out and say, hey, my name is John Smith. I'm brand new to investing. I've never bought in a multifamily complex. I've only done a couple of houses here and there. I'm looking at 20 plus units, right? I mean, you're going to why would we want to bring you a bunch of deals? I've literally got thousands of people who own thousands of units who want this complex. I think the best thing you can do as a young person or a new person, is hook up with one of you guys, hook up with someone who's in the business, who owns units, has the connections, and then be able to speak as though you are a team. So John Smith calls up Beau Beery now, who's still a new person, and says, hey, my partner Jake and I, we own 800 units in the market. We are looking at picking up some additional assets. We heard you're the guy in the market. We'd love to learn more about what about what the market's doing. What are cap rates looking like? What are the rent increases? So you're talking as a bigger person, right? You only get one chance to make a first impression, and newbies are not going to be ones that we're bringing assets to right away. We may add you to the new listings list so you get the email, but you're not going to get the first call before it hits the market, right? Jake and Gino are going to get that first call.
I just want to jump in here one more time here, and then I'm going to stop interrupting. If folks want to know where to find your team, there's an event November 5th and 6th, Orlando Multifamily Mastery 5. You could potentially find your team there. All right, enough with that.
Hey, Mr. Stenziano, this is the Jake and Gino show. So you're never interrupting here. It's Jake and Gino. So, and what I want to go back to what you said also, Jake, before about being the salesperson. Both talking about positioning yourself and posturing yourself. Now, Jake and I were too stupid in the beginning to know that. We just started calling brokers, and it was a different time. It was a different market. It was a buyer's market when we started out. So we had more opportunity. There were a lot of deals in the market at the time, so we could do that. Now that it's more competitive and it's still a seller's market, this is what we're talking about, maybe hooking up. But at the same time, look at what experience you have. Look at what credibility you have. You may not own multifamilies, but you may have 100 single family homes. Big shout out to Andy and Scott, Jake and Gino community. They have 100 single family homes. If they call Beau Beery up and say, hey, we're transitioning, I think Beau's going to take them seriously. Or, hey, I'm a doctor or a lawyer and my net worth is $15 million. I'm jumping into this thing. That's a little different. Or I'm a business owner and I'm transitioning. So really create that profile of yourself, create your bio, and make sure when you have those talking points, why does Beau want to get on the phone with you? And I think the other thing, Beau, talk about the property tour. I mean, do you bring investors on property tours? Do you like to show deals to investors, or do you like to do the coffee shop thing? Like everyone says, let's go get a cup of coffee. What is your big MO? What do you like to do with investors, new time investors that you're meeting?
So you mean when they're coming to the market and want to kind of learn more about the market?
Yeah, and you have a couple of assets. Isn't it better that you show them the assets than instead of just saying, hey, let's waste time and go get something to drink or something to eat, right?
Yeah. We hop in the car and we tour the entire market. We'll go on to properties that have either already sold, ones that I have for sale. Now, before I'm doing that, or any broker, obviously I'm qualifying that person, right? Mm-hmm. I can't take a couple hours out of my day to get with a brand new person to do that. But if that brand new person is connected with a Jake and Gino and they're working together and I can see they've had transactional history, absolutely worth my time, right? But you can't, it's just really hard. And I hate putting this news out there and being the guy who's telling you this.
You're only one
man.
man.
To put on your broker hat, put on your seller hat, Why would I or a seller spend time with someone brand new? And I don't care if you've made $30 million in XYZ business that sells widgets. You're still brand new in the multifamily field, and the seller wants transactional history, right? They want to know that you've done this over and over again. They want to know you're going to show up to closing.
Bo's serving up some humble pie, Gino.
He is. And the book, you wrote the book, Beau. Why did you write your book? What were the big takeaways from the book that you wrote?
Yeah, so two things. I mean, it talks about building a reputation in the market. It's huge. Reputation is everything to the investor, right? It's the reason brokers and sellers call a buyer for their asset is because they have a reputation in the market. And the number two thing the book talks about is how to network with these brokers so they think of you first. So that when a seller calls a broker and is even just saying, hey, Beau, we want you to do a BOV. We're not sure if we want to list yet. At that second, I am already as a broker thinking about the buyers I want to give a heads up to in case I get the listing. I don't even have a signed listing agreement yet. I'm already thinking about those 8 or 10 folks who are murderers in this business, and I want to give them a heads up. They're guys who I know they're not going to drive to the property and get out of the car and walk around and talk to staff. But they can start talking to their construction guys about what construction costs are going to be. They can start talking to their property managers about what the rents could be post value add. They can start talking to their lender. So that's why when I do get the listing and I've built the Dropbox and I go to market, these guys are already 3 weeks ahead of time, right? So the book talks about how do you become that type of investor that we salivate over, that sellers can't wait to do another deal with, right? When I closed on a deal with someone and I say to the seller, you know what, Jake and Gino, they closed 3 days ahead of time. They didn't cause any problems. They're phenomenal. Mr. Seller, you own Pine Forest Apartments in Jacksonville, very similar kind of asset. You ever thought about, maybe we should just put it underneath their nose. I don't want the listing, Mr. Seller. I don't need to take it to market. Let's just talk to Jake and Gino real quick. Maybe they'll give us a quick offer that we can't refuse. All right, Beau. All right. Hey, I like those guys. Let's take it to them. Right. And I've done a bunch of transactions like that, but it's the reputation. It's the way you participated in that transaction. It's the way you participated and operated before the transaction. It's what you did after the transaction, right? It's like that side game of building that reputation in the market where you hear things that no one else does when it comes out.
But we've been focusing a lot on the buyers. What mistakes do sellers make? I mean, it seems as if sellers can't do anything wrong, but I mean, the market's going to shift. So in the next 12 to 24 months, as this market shifts, I'm coming to Beau as a seller. What am I doing wrong to you, or what can I do better trying to sell my property?
Yeah, lots of things. I mean, I find that record keeping is value, right? And when a seller has excellent record keeping, it's literally worth, I don't know how to price it, but it's worth some money. When I can tell buyers, this guy has phenomenal P&Ls, balance sheets, CapEx records, surveys, floor plans. Mr. Buyer, if you win this deal, day one, I'm going to give you a Dropbox links with everything in it. The problem is there's a lot of sellers out there who either don't keep records well, or they try to give me, the trailing 8 months because everything before that was dog crap, right? And they're trying to explain to me, oh, well, this repairs and maintenance category, you should just use the industry average because mine, I've been doing a lot of CapEx
Beau, there's something called the T now with Fannie for preferred buyers. And you literally evaluate off last month's numbers. So you don't need it anymore because they're trying to find ways to make these deals work. So it's not even the T3 annualized, it's the T now. So maybe we don't even need that.
Right. But this seller wants
that's true, by the way. That's a real
T36
thing.
when they're buying.
I get it. I'm just joking because I heard that literally a couple days
ago.
I'm
Yeah.
like, you got to be shitting me. Guys, here's the thing too on this. We have something called a property log. If you email the G-Daddy, Gino@jakeandgino.com, he will actually give you a copy of it. And ultimately what we do, because this is so important, is we keep a history of our roof age report, when the parking lot was last done, all the pertinent information, in addition to everything that's going to be in the CRM, because that gives a little storybook of how the property was maintained and cared for. Beautiful thing to do to really make selling a lot easier.
Pertinent information. I like that. Big words. Jake's using the big words today,
man,
bro.
I wore my pink shirt today.
And you know the funny thing, Jake, we didn't start doing this until about 2 years ago when you had the epiphany of like, we've got 20 different LLCs. When did we freaking last time clean the gutters? Who is the electric provider on here? I mean, all this kind of stuff that you need, and as far as doing CapEx and due diligence on the property every 6 months. So the property log has been crucial for us. So when you're ready to turn over, or if you change a property management company, or you hire a new employee, bam, you slide it right in, you have the property log. And when you're ready to sell or refi, you just hand it over and the property log is all done and you look professional. So great tip, bro.
I think the other main thing I run into is for a seller who does want to sell, or at least says they want to sell, is being more realistic when the market speaks. So for instance, I've had a couple of deals in the last year where we've agreed on a price. I've told them where I believe the offers are going to come in, which is a little bit less than the pricing guidance. And I will take on some of those listings if I believe the seller is of the type of person that if the market speaks, meaning I bring in 10, 15 offers in that range I said, which is below the guidance, that they'll do a deal, right? But oftentimes I'll have a seller who I mistakenly thought that they would let the market speak. I go to market, I bring in 10 to 15 offers. First of all, I show it to 1,000 people, the best buyers in the world. Every buyer, first of all, every buyer who owns every asset in that market, plus all the buyers in the world who want to own assets in that market but don't yet. So it's exposed to all those buyers. You get all the inquiries, you get all the offers. And then if you have a seller who thinks that the entire world is wrong, right? And that all 1,000 of these buyers have got the value wrong, the 15 people who turn in offers, all in that range that I said, are wrong, that's difficult for me to swallow, right? So it's rare in this world in which any remotely good broker has mispriced something or gone to market at just an obscene price. We have too much data. There's too much data in the market. We cover every single sale, right? There's so many data points out there, and we know exactly how buyers underwrite. We know how the lenders underwrite. So there's a very small window in which we know offers are going to come in, right? So to go to market with the thought that you're going to find the one idiot who pays 25 or 30% more than what everybody else was is a little bit unrealistic. I'll take a deal to market if I believe that their ask price is above where some of the prices will come in at. If I believe there is one person or a couple people who could get to that, but it can't be too much above. If it's too much above, I don't want the listing. And I told you, I just turned down several of those in the last few weeks. I feel like my reputation will be hurt too much because the price is way too above any pro forma I could reasonably come up with.
Love that. Before we go to the short answers, give me your opinion of what makes a good broker. And because there's people out there that may want to aspire to become a commercial real estate broker out there. And even for the investor, what am I looking for in a Beau Beery type broker to be able to work with that broker?
You can sniff out a salesman, right, versus an advisor in 2 seconds. And so luckily I had good mentors early on and learned that if you can truly give proper advice, even if it costs you money, that will be noticed in the market. Because the problem is anybody can get a real estate license, okay? My 17-year-old next year could pass the course and become a broker if he wanted to. It's super easy, right? And that's the problem. You get a lot of yahoos in there. And especially if you're not a big producer, you start cutting corners. You start becoming a salesman, right? You start saying things to get someone to buy. The reality is that—
Let me give you an example. Let me give you an example here, because I got a classic example of a broker in town. So broker so-and-so trying to get me to buy this building. I love it. I love the location, but it's 1950s build, but it's been completely renovated. What about the plumbing? Well, it doesn't currently leak. What about the plumbing? It's the whole thing's been updated. Has the plumbing been touched? No, but it doesn't currently leak. This is a conversation that I had with a broker. That is what Beau is talking about. That is a snake oil salesman trying to sell you something. Look, 72-year-old plumbing, it's going to have an issue at some point. Okay, we know that. Don't just try to sweep it under the rug. This is an example of what.
Well, and you lose trust. I mean, listen, if I was selling a $10 widget, I might be able to be a salesperson and sell the $10 widget. I am working now with the smartest, most successful unbelievable people in the world. Okay. Multifamily investing is like the top echelon of some of the more, I mean, they're the more successful people in the world. I'm not going to be able to sell you a $10 million asset, right? What's more important to me as a salesperson to be successful is being honest, integrity, and morals, which is easy to say. It's hard to practice. If someone says, well, Beau, what about this? And I know that what they just said to be true and it could cost me a sale, it's hard to pass up a $300,000 commission, right? But it's the right thing to do because I'm going to be in this business another 20 years.
Playing the long game.
And I know Jake and Gino is going to catch that I'm selling them on this, right? They're not going to come out to me and say, Beau, you're full of shit. You're being a salesperson. I'm never going to use you again. The worst thing is they're never going to say anything to me. They're just not going to ever use me again, right? Mm-hmm. Investors know when you're blowing smoke up their butt. They're seeing as many properties as you are. They're just as good as psychology as you are for the most part, right? They know when they're being sold. The integrity part of this and pointing out the obvious is just it's hard to do, but it's simple at the same time.
Mm-hmm. It's all about the value. So, all right, gang, let's take a quick time out to hear from our sponsor.
If you are looking to get involved in multifamily, this is where you need to be.
The team you've built is incredible.
There is no egos here. Everyone is always looking to help the other person.
All right, we are back. Now, we discussed a little bit about deals coming to market, and I'd love to, give what you can. Who is coming to market right now? Why would somebody be coming to market right now? Give me a little bit of an avatar of the folks that are actually bringing deals to you right now.
Yeah. My last, I would say, 4 BOVs that I've done were from folks who agree that, yes, their rents are way up. Yes, they know buyers are expecting values should be less than they were several months ago, but they bought at such a good discount or such a good price based on the year they bought it. And they've added so much value that the differential between what it may be worth now with higher interest rate and what it was 3 or 4 months ago doesn't really make any difference in their life, right? So you bought something for 8 million. It's now worth 16 million 5 years later. That might have been $1 million difference because of the interest rates. I'm ready to exit. I'm good, right?
Just
all 4, the last 4 listings I've done where there's just such a big delta. They're just like, hey, yeah, I'm good, man. Like I've done my value add. Let's see what it's worth in the market.
What was the hold time average of these?
One was a 2020. The 2020 one was an 84 unit deal that had 21% vacancy at the time, a little bit rougher neighborhood. He's cleaned everything up, kicked out a bunch of bad people, increased rents $250 a month. So he's created tremendous value, right? Another one was 2016. One was a
the 2016's just got to be a monster at this point.
It's a good one. It's a good one.
It's a good one.
But I'm also battling. They want too much, right? So, and then one was
let the market decide, folks. Right?
If I believe they'll let the market decide, right? Like I look for cues from the seller. If they're saying, Beau, we want X, we're not taking any less. Don't give a crap what you bring me. This is our number. And he's made it abundantly clear. I have to decide as a broker, if I don't take this, I know he's going to find a broker who will, and will that broker sell it? It has to be that. It has to be that big of a price that I'm willing to give up a $500,000 commission.
That's such a pinch, man.
Commission.
That is such a pinch. Like you're trying to do the right thing, but that's got to be a struggle for you.
But you have to understand. I mean, I'm going to be talking to a couple hundred buyers, and I'm going to be telling them the price. And if I have to call 200 Jake and Ginos and tell them a number where they look at me and they're like, "Dude, you've fallen off your rocker." That's 200 iterations that I've now declined my reputation. Yeah. Which makes it harder on subsequent sales. but it's a six-figure fee, right? So it's this balance. You got to like, could another broker sell this? Is there that one person out there who may pay this ludicrous price?
So you have deep meditation sessions in the dark with yourself, just trying to.
Usually it makes itself pretty clear.
We talked a little bit about financing. Are you seeing from the buy side any, kind of new things pop up, or people going to say community banks or local banks? Where's the debt coming from on the recent transactions?
No, it's mostly all the same sources. I mean, I would say that the credit unions I've done a few under 50 unit deals.
Mm-hmm.
Credit unions in your markets have had some pretty good terms. I just got quoted on I've got a little 12 unit deal that the seller is contemplating coming to market on. This one's in Gainesville. The current lender would offer 30-year debt, 75 to 80% loan to value,
nice,
4.75 to 5% interest rate. And he said that could go to 5.25 and 5.5 this week.
So get it now.
Personal guarantees, and probably won't be interest only periods, but that's pretty decent debt.
4.7 on a 30-year AM. Give me some of that.
Right now, it's going to go up.
Give me some of that. Get that rate lock now with them. I think that's the key. You got to
show.
You got to get it. What about, like, you talked about track record? Someone's coming to you like for the first time. How important is it for them to communicate their track record if you haven't worked with them before and that they're a closer? Because I think it's one thing to say it, but to communicate that's going to get you excited, because you're human, right? If I come to you and I'm like new to the market, I'm like, hey man, done this, but I get deals done. I don't bust your chops. This is how it's going to go. That type of statement, if it's believable, has got to carry some weight. Is that fair to say?
Yes. I got to tell you, letters of recommendation are big.
Ooh.
I mean, if you can get brokers, lenders, and sellers to write you letters of recommendation, you should be doing that on every deal. I'm telling you, I've got several folks, when they turn in their offers, their LOIs, they will turn in 3 or 4 letters of recommendation, in one PDF below the LOI, from usually brokers that I know or lenders that I know, that I can call up and say, hey, how was it to deal with Jake and Gino? Did they close on time? Did they retrade? What was the real deal? Because brokers are going to tell each other the real deal. If I say something derogatory about another investor, I know that broker's not going to call the investor and say, hey, by the way, we turned you down because Beau said you
because
sucked.
they want to know. That's extremely high value information for that broker. So
I did a deal. I'll tell you, I did a deal. It was an $11.5 million deal in Gainesville in late 2020. I had 15 offers on it. The top offer was, there were 3 offers that were very, very close, and they were all very good offers. One of the guys was willing to put down $500,000 hard day one, which we're not seeing that anymore right now. But he had never showed up on a tour, never set foot on the property. It was almost one of those too good to be true, right? But he gave me a letter of recommendation from a broker I knew in Jacksonville. And I called that broker up and I said, listen, so-and-so is turning in an offer. He said that you did such and such a deal with him. I said, I'm feeling a little uncomfortable because he's got this big hard money down. I've not done a deal with him. I know of him. He hasn't even showed up on the tour. It just feels weird. And he's like, Beau, he did the same thing with me. In fact, never even showed up during due diligence, just had his contractor show up. He said the dude closed on time. He said, I've done 2 deals like that. He's like, he's gold. Come to find out, this person I won't go into this person, otherwise they might know him, but he can't show up oftentimes, right? For whatever reason. And so we chose him. I called the seller up and I said, listen, I talked to so-and-so broker. Oh yeah, I know that guy. Yeah. So I called him up. He vouched for him. This is real. And sure enough, in our deal, never showed up on my deal the entire time that his contractor run the whole thing, closed, and they're doing massive renovations on it. They're building additional units, great buyers. But that one letter of recommendation is phenomenal. And the thing is, a small world. Most of these brokers, we know each other. And most of the lenders, a lot of times we've done deals with these guys, rack up those letters. And you know how phenomenal it looks when you turn in a 2-page letter of intent, and then you've got 5 backup letters from other people? That's a big deal.
Yes. That's awesome. I love that tip.
This is like a signature branding play. He's like the stealthy night walker. It's a way to get like brokers intrigued, but he doesn't show up. He's the man of many talents, but he won't show up.
Stay thirsty, my friend.
Stay thirsty. What about if you could share? I just love to know the worst behavior on a buyer in the last 2 years. What's the thing that pissed you off the most? Without naming names, who's on the naughty list? What they do?
A few years ago, I had a buyer who was trying to flip during the contract period. He was running out of time. It was one of my favorite sellers in the world too. I've done a bunch of deals with this seller, and it was just really, really stressful. Damn near put me in a loony bin. And this buyer called me up. He's like, "But we need to meet." I go to his office, and it was literally just me and him in a conference room, and under a table has a wad of cash. Easily, I mean, it was like a wad of cash. Slips it under the table.
Easily how much?
I think it was around 10 grand. I mean, just when I think about how many hundreds would fit in a wad, reaches under the table, finds my hand, puts the wad in my hand, is trying to convince me of doing something during the transaction that buys him a little more time.
A stack of that might be like 30 spot right there.
Well, it was wadded in a roll.
Oh, it was rolled up.
In a roll. Yeah. Not this thick of just, it was wadded in a roll.
Yeah, we talk about bricks over here. So
and I was just super uncomfortable and took my hand from under the table, put it back on the table, and said, "Listen," I said,
at least you got a roll of cash under the table.
That's what I was thinking.
And I said, "Listen," I said, "I have a vested interest in helping you get to closing anyway."
You sure he wasn't asking for a favor? Or he was clearly asking for a favor.
I listened to his words carefully.
Okay.
Anyway, I gave it back to him, and we eventually made it to closing. But dude, it was just like, it was such a scary moment that it was like,
hey man, listen, when your values and you do the right thing are there, this shit ain't scary. You just say, "No thanks, bro. Not for me."
Whew.
You're right, but it's being in that moment.
Because he was like, still, I like Porsches, and maybe I can go buy one right now. Right? Man, this is great stuff. Really appreciate the transparency and the honesty here. Best way for folks to get a hold of you?
Yeah, 3 ways. I mean, I've got a website, beaubeery.com, BEAUBEERY. The reason you want to go there, whether you invest in my Florida markets or not, is I got a bunch of really great stats on the landing page. And if you go to the resources button at the top, you'll see all the markets I cover. And you want to see all the stats that I have on those markets. If you can master those kinds of stats for your markets, you'll be able to pounce on deals when they come available. That way you're not spending 2-3 weeks of when a deal comes to market, researching whether or not the market's even one you want to be in. The number 2 way is my YouTube channel, Beau Knows Multifamily. I got all kinds of really solid, rich stuff that comes out there. I don't put out any like chauncey things. Really high level. I got a playlist for beginners. I got a playlist for advanced level guys, all kinds of stuff. And of course, please get my book. It's right here, Multifamily Investors Who Dominate. That is the inside look. It's the playbook about how conversations happen between brokers and sellers, how we choose buyers, why we choose buyers. It allows you to become the person we salivate after.
Yeah, if you're an investor, I mean, there's literally, I typically read business books about scaling, but this is like the real estate book that I definitely recommend. So
thank you.
Gino with the Swiss Army knife, bring us home.
Got a couple of real big nuggets, Jake, from the show. The first thing is Beau is a great speaker as a real estate broker. Very challenging to get brokers out there to come to speak who are actually entertaining. So I wouldn't miss it. I mean, he's been at our boot camps, internal Jake and Gino boot camps. He's done a great job. So come out November 5th and 6th. And really, that's part of the buy right framework. So it's really important to get out there and listen to Beau speaking, because it's very hard, like I said, to find brokers who can actually provide value and give insights. The second thing is be reasonable as sellers out there. Don't beat Beau up. He's had a great job for the last couple of years. Things are starting to shift now. So, I mean, don't beat him up. Prices got to come down a little bit. Let's be reasonable. Let's find that middle ground. I think the third thing, Jake, is markets are shifting. They're constantly shifting, whether it's from the buyer's side, whether the debt markets are shifting. Don't be static. Stay on top of what's going on. And I think, Jake, the last thing is I'm going to actually have you call our lender up, our brokers in the market, get those recommendations. That one tip right there from listening to this podcast will land you a deal. I'm completely honest. When you read that, I freaking, and it's something that's so obvious, but how many people have done it? And don't be afraid to ask. Just genuinely ask. Please, can you spend 20 minutes? If you don't know, if they're not sure what to write.
By the way, write it for them.
I was just going to say that. Yes,
I would love that.
Yes, exactly. And it's great.
I'm ecstatic that you asked me.
Don't make Beau do some work.
Exactly. So I think that recommendation is amazing. And once again, come out November 5th and 6th. It's going to be an amazing event. Beau's going to be there speaking about markets. Go on his YouTube page. I've got the book. I'm holding the book up here. So make sure you go on. It's on Amazon, I'm assuming. You can go pick it up on Amazon as well. So honor and a privilege to be able to speak to you. I mean, it's
Gino, he may be more entertaining than Vanilla Ice there. I don't know. Like, we might need to get him on.
Is he going to be there?
Yes, he's going to be there. Yeah.
He's going to be rapping and singing with the G Daddy.
I love Vanilla.
Yeah.
Get a little 90s going. So
Wow, that's awesome.
Yeah.
Guys, this has been a hell of a lot of fun. Sorry for the weird interaction you had with the guy under the desk. I'm glad it's over. Hopefully not too much PTSD. Always bringing value. Thank you so much. Beau knows, and we'll see you next time. Thanks, guys.
Thanks, guys.